Are you approaching retirement and wondering how artificial intelligence is changing the workforce? What about the impact of AI on your investment portfolio? And lastly, are you wondering if Bitcoin and other cryptocurrencies have a place in a well-diversified investment portfolio? Make sure to stay tuned for this next edition of the Planning for Retirement podcast, where we help educate and empower you to achieve financial security. My name is Kevin Lau. I'm your host, and I am super excited to bring about this topic to the conversation today and to this podcast today. I'm going to be joined by Brian Bonewitz. Brian is an AI consultant who was previously a portfolio manager assisting high net worth individuals and families and ultra high net worth individuals and families. And their firm managed over $3.3 billion in assets. Brian has been involved in the crypto space and the AI space for a number of years, and I just thought it would be great to have him on the show for him to provide his unique insights on this specific topic. Before we dive in, I just wanted to say this is not an endorsement for cryptocurrency, and it's not an endorsement to invest in AI technologies directly. I just want to fully disclose that because there are substantial risks anytime you invest in emerging technologies, especially the ones we're going to talk about today. Also, there is a point in the interview where Brian mentions wash sale rules regarding taxes for cryptocurrency. And I did point out that there was a change in the ruling on this. However, that change only applied to the exchange traded fund versions or the ETFs that are backed by Bitcoin, not the coin itself. So if you do have Bitcoin, and let's say you have a $10,000 unrealized loss, you could theoretically go into your crypto wallet, sell Bitcoin, recognize the loss, and immediately buy it back so you never lose exposure to the currency itself. And that would not be considered a wash sale under the definition, given the fact that the IRS looks at crypto as property and not a security. So just wanted to point that out there. And there also is a point in the interview where my computer totally cuts off. So if it feels like there is a little bit of a weird transition from one conversation to the next, that is why. So Zach, my editor, good luck on fixing that and making it streamlined together. So without further ado, here's the full interview with Brian. Hope you guys enjoy it. All right, Brian, thank you so much for jumping on with us today. We appreciate you.
Hey, Kevin. Thanks for having me. Appreciate it.
So, very interesting topics today. We're going to be talking about AI. We're going to be talking about robots. We're going to be talking about crypto in the markets and just the overall impact. So obviously some serious conversations, some really interesting topics here, but would love to just kick things off with just learning a little bit more about you and your professional background and how you even got into this space in the first place.
Yeah. Honestly, if I did not go into finance, I probably would have went into technology. I mean, I remember taking apart a computer when I was maybe 10. I just couldn't figure it out, right? And I needed to figure it out. But, finance was the more stable route at the time. Dot-com bubble was happening. So that's where I went. I spent about 20 years in that space, wealth management advisor, obtained my CFA, portfolio manager, did that for a while. But after I got my CFA, I was like, well, what do I do now? You kind of get like, what do I do? Stir crazy. So I took a 6-month coding boot camp. Now, at the end of it, I could not create a website. Okay. I could not do a lot of things, but I learned how the tech companies operate, and I could see the strategy that they had. And one of the main things that I picked up on was, as I was going through Python in the program called Pandas, if I used, let's say, a CPU chip, I have 10,000 rows, it may take me 3 minutes to process it. If I use a GPU chip, NVIDIA, 3 seconds.
Wow.
And I could see the way the cloud was moving. Microsoft was making strides. Google had hired Oracle's head of cloud sales. It's just a nice business. It's a very profit-rich business. So that was, for me, I found out about how the companies make money, and that actually paid off more than the actual class. It more than paid for itself.
That's awesome.
And I've always liked it. Even when I came home from work, I would do like a Udemy class and just learn and keep up with it.
So I feel like 2023 was like when AI just sort of, all of a sudden it was just all over the place. You know, the media was talking about, open AI and, chat GPT. But, to your point, this is technology that's been in the making for a while. When were you at that point where you're like, this is getting real here? This is about to impact our day-to-day livelihoods and businesses as a whole. Like, when was that aha moment for you?
I would say for me, it was back in that coding boot camp in 2018. We did a machine learning predictive analysis for people who might be at risk for heart disease. And if I'm capable of doing that, then there are people much more talented, much more intelligent than I am that are doing things that I can't even comprehend.
Yeah.
So when it came out, I was a little bit surprised. I was also really excited.
Yeah.
I wanted to play around with it and understand how it worked.
You're saying you're talking about Chat GPT now specifically?
Yeah. Okay. Yeah, when that thing dropped, I was like,
you're all in.
Wow. Okay. And then Microsoft said we're putting $10 billion into it, 49% stake. And I said, all right, well, here's more money, Microsoft.
Yep. So talk about what you're doing now. Like, what are you doing with AI and investing in that technology overall?
I'm learning more and more about it, the back end, how it works, how it operates. We could talk about this later, the agents within AI that are going to be coming in the next maybe 18, 24 months or less. So I had left my previous employer and went back to school to get certified, Microsoft Gen AI. I figured maybe kind of like it's 1994 and you're a phone book salesman, or it's, 1999 and Jeff Bezos is on 60 Minutes and he's saying, I think Sears will be out of business. People laugh and I'm thinking, what if? Genie's out of the bottle, right? It's not going back in.
Yeah, no, that's kind of how I feel. I feel like, a lot of people, I feel like in 2023, how the technology was received initially, and I'm talking about ChatGPT specifically. I know there's others out there, the Gemini and all that, but like specifically how it was received, it was like very mixed, like I feel like some people were all in, like yourself, like, oh, I want to embrace this and, it can improve my efficiencies and look at all the capabilities. But a lot of people, and especially our listeners who are in this 50-year-old to 60-year-old range, they've been working for, let's say, 20 to 30 plus years. And they've sort of seen this evolution of technology, like you said, during the dot-com boom. They've seen this evolution of technology all as an adult. You know what I mean? And now they may, you might be listening to this sitting there at 55 or 60 thinking, is my job going to even be here in the next 2 to 3 years? Can I even make it to retirement? Let's talk about that. Like, should we be concerned?
I'll be the first one to admit it. I was curious. I started playing around with it. And then it got to a point where I was like, my job is going to be replaced. I mean, that was truly, I had that initial fear. As I was playing around with it, I'm thinking, okay, I can do this in maybe 15 minutes, what would normally take me 3 hours.
Right.
And if it continues to progress, if the rate is progressing, what do I do? Do I take up a trade? I don't know. Like I went through that whole, kind of existential crisis, which is why I decided to start learning more about it, because that's what fear is, right? It's just fear of the unknown.
Yeah.
So I wanted to understand as much as I could. And the more I learned, the more I understood that it isn't going to replace you. It's more like a personal assistant to make things significantly easier for you. So, for example, right, what you do, right? So you've got a document, you've got compliance, you've got this, and you've got that. Things that take up your day where you'd rather be talking to people.
Yep.
Right?
Yep. And
if AI can take that and just handle it for you, and it can handle it, that's the other problem, right? You have to make sure that it's doing what it's supposed to be doing.
Yep.
But if it can, then you're going to be more productive.
Yeah.
You're going to have happier clients. You just have to find a way to work with it, really. And the best way is to understand it.
Yeah, and I think that's a great point. I've my realization, because I was one of those skeptics initially too. Like, not that I didn't believe, what a lot of people were talking about. Hey, this can improve our efficiencies and make us more productive. I was kind of on the camp of like a little bit resistant. But earlier this year, we started to introduce this because a lot of our meetings are on Zoom. We serve clients virtually for the most part, and so note taking. There's all these tools out there. Hey, this is a note taker. And like you said, it's like almost like an assistant that is watching and recording this meeting. And if it's turned on, then that AI assistant could then generate a pretty nice little summary of the conversation, and spit it out to me within a couple of minutes. It's in my inbox, what I'd say to that, it's not 100% accurate. Like I was sort of laughing with this client of mine because she jumped on and was a little bit skeptical. She was like, Kevin, I kind of want you to turn that off. Like, she was in that resistance. She didn't want a robots listening to her conversation. So I told her, what it's for and what it's doing. And she was like, okay, you know what? Let's try it out. We'll have the conversation. But she's like, I want to see the recording. I want to see the transcript. So I didn't edit anything. I just sent it to her. And she was cracking up laughing because some of the things that they thought we were talking about weren't even about that. It was about someone else. It was saying she had done something when it was something else. So anyways, it's not 100% perfect, but ultimately what I found was it created this framework of the conversation. And then we could go in, or my pair planner could go in, or our client service associate can go in and edit those notes and sort of, make sure the documentation is airtight. So it is saving us time, and it allows us to serve our clients more efficiently and effectively. So that's when I began to sort of say, okay, let me embrace this a little bit and kind of actually use this technology to our clients' advantage, as opposed to me thinking it's going to replace my job. I'm trying to think, how is this going to make my clients' lives better? It's going to free up our time to do more things for them. But on the flip side of that, I think the concern, and I was reading this quote from Center for AI Safety's website. Okay. There was a group that was created to essentially protect against this potential risk. But essentially what the quote was, it says, mitigating the risk of extinction from AI should be a global priority alongside other societal scale risks, such as pandemics and nuclear war. And so like reading that, I'm like, well, what if this thing gets out of control? What if it's like I, Robot, the Will Smith movie? I mean, like what should the average person understand about AI to kind of make us think like, okay, we're not going to be extinct. Hopefully there is some regulation and protections, from having this technology get in the wrong hands. Like, I don't know.
Well, I've had that question too. And I go back and forth, it could be, we could end up like the Matrix, the Terminator. We could end up like that movie WALL-E, or, we could end up like the movie Transcendence with Johnny Depp. Have you seen that one?
I haven't seen that one. No.
Okay, so I'm going to spoil it for you.
All right.
Basically, Johnny
That's all right.
Depp,
I'm not going to watch it. We don't have time to watch movies right now, so you're good. Spoil it for me. But if you're listening and if you want to watch that movie, you may want to, fast forward a couple of minutes.
So Johnny, he's dying, and he uploads his consciousness to the internet, right? And somehow, some way, he's able to take it, and he's able to manipulate people and all this other stuff. And government comes in, and they're like, "Oh, we're afraid of it. We can't give you that much power." And he says, "Okay, fine. I'll just shut the whole thing down. I'll die." But before he dies, he shows his girlfriend or fiance his vision. And his vision was clean water, clean air, food for everybody, basically utopia. And then, the EMP goes off and we're back in the Stone Age. So I really don't know which way it's going to go. What I do trust in is capitalism. People are greedy. I mean, they're going to want to make money, and they don't want their customer base to get eradicated, right?
That's good. Yeah, that's a good point.
You can't control it. We'll see what happens.
Yep. So what about investing in AI? So like if you're a listener out there, you're in your 50s, you're sort of in this final phase of building wealth, you're trying to, stack as much in your 401k and Roth accounts as you can, or brokerage accounts, to really, prepare for financial independence. Because you're probably thinking, hey, if I retire at 60, if my job is still around, I could live another 30 plus years. So like, what about for those that are interested in investing in AI? What should they be looking out for? What should they be considering?
Well, let's say you're in the S&P 500, right?
Mm-hmm.
So you've got Apple, which is around 6-7%, Microsoft 6-7%. Apple, Microsoft, Amazon, Google, Tesla, NVIDIA.
Mm-hmm.
I think they comprise for about 15 to 20%.
Yeah,
you've already
Meta thrown.
You've got
Meta,
yeah, you've kind of got it covered.
Yep. So like just investing in the S&P 500, you're investing in big tech, and big tech's the one investing in AI. So you're essentially investing in AI, even if you didn't even think you were, you're investing in the technology yourself if you invest in the S&P 500.
Even Warren Buffett, right, who hates technology, doesn't like AI, he still owns Apple stock. And Apple, they do AI. You look at the financial side of it, JP Morgan, right? They are streamlining their businesses towards AI, risk management. Also with the Bitcoin ETFs, they're going that route. Johnson & Johnson, they're using it for drug therapies. Walmart just came out, crushed earnings. Big part of that was AI and the target demographics. Companies like Deere, you think Deere, they just, they're farm equipment. IBM Watson, they were able to look at the crops and see which crops need water, fertilizer, a little bit more efficient. So the companies that are going to succeed are going to adopt it because it's going to lower their costs, it's going to increase their profits, and just make things more efficient. It doesn't mean people are going to be laid off. It just means those talented people are going to be tasked to do something else.
There you go. I think you nailed it. I think, the productivity piece and freeing up our time. I mean, what do you want to free up your time from? Doing things you don't want to do or that someone else could do. And if a robot can do that, that's a positive for you. If you're doing work that a robot could do, okay, you might be a little concerned. If you're a professional note taker, and you're sitting around just taking notes and, in the courtroom, right? I mean, like, what about those individuals? I mean, those types of jobs, I feel like probably are at risk.
That's a good question. I've never even thought about that. Those professional note takers, they're something else. I mean, they use symbols, right? Don't they? I mean, I don't know if AI can transcribe as fast as some of those lawyers speak.
Yeah. And maybe it's what we're talking about is maybe it's making those individuals even more efficient where they can do multiple things at once. There's probably some way it could elevate their productivity without replacing them fully. And I think that's really where I'm at too is, I don't think it's going to just replace the entire workforce. I think it's just going to make us more efficient and effective in the areas that we shine as humans. Robots are one thing, but as humans, we are different creatures, right? We've got emotional intelligence. But AI, I mean, for the way I understand it is that as this thing continues to be trained, as we continue to feed this information, so if you type something into ChatGPT or Gemini, that robot is being fed more information, more data to make it even better, even more efficient. So like long term, it could, it's probably something that we can't even fathom today, 2024, what this is going to look like in 5 years from now or 10 years from now, right?
Yeah, I don't think you can. I think you have to compare it to, Henry Ford and the Model T. That was completely out of the blue, right? And how do you make the Model T? Well, you need steel, you need an engine. Here comes the semiconductor companies that provide that. Okay, so now I've got my car. Am I going to drive on a dirt road? Probably not. Here comes Microsoft and Google and Amazon. They're going to create the roads for you so you can drive on it. Right. The gas stations. And then, 10 years goes by and I want my car to go faster. I want maybe a Dodge Charger. Maybe I want a GM. Right. So now there's different options, and that's where the software comes into play. It can be, for example, Palantir, great company. They do government contracts. They do also commercial. You've got shouldn't say it's CrowdStrike. There's another one. Of course, they took a hit, but they use AI for their cybersecurity. So different areas will kind of pop up, different opportunities. It's kind of like the playing field has leveled out from these large companies.
So Brian, we talked a little about the S&P 500 with the Magnificent Seven. You know, the big tech boys are doing investing in AI. I'd love to hear more about what y'all are doing, you know, with Rafa AI, and you know what your firm is doing from an investment perspective in AI and overall, and then also we'll love to hear how you got involved with them as well.
Yeah. So funny story. You know, when I left my old employer, I wanted a product that was similar to FactSet, but it didn't cost me $15,000 a year. So I went to Product Hunt and I found Rafa. It was highly rated. So downloaded it and went to one of the sections, and I follow AMD, and I saw that PE ratio is 900, and I instantly deleted it. And the CEO emails me. He was like, "Hey, what didn't you like about it?" Which I thought was really unique, because nobody really asks, like, why did you not like my product? Mm-hmm. I like that, you know? And I was like, well, you know, the PE's off. You're looking at the ETFs, and, you know, there's a short ETF. Like, there's a few things. And he was like, "Hey, would you mind just kind of giving us some feedback, you know, using it?" I was like, "Yeah, absolutely." And then after a few months, they were like, "Hey, you want to come on and be a consultant?" I said, "Absolutely. You know, this is fantastic. I get to use a product that is incredible with what it can do with the answers. And I get to be a part of that AI space. And the people I work with are absolutely brilliant. You know, ex-NVIDIA employee. I've watched him do things on an app that would take Wells Fargo 6 months. And it's really, really good. And it's meant to just democratize all of that financial information. It was hard for me to grasp it. I had to unlearn a lot of things that I was taught through the CFA and through my career. You know, okay, you start with the 10K, you read about the business, you go through the balance sheet, income statement, cash flow statement, you look at the ratios, and you're always saying to yourself, okay, this company is guilty until proven innocent, right? Are they telling the truth? And it took me about a month. I was like, hey, can I get this data? And then eventually I was just, oh, can you tell me blah, 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 blah. And it's just, I was like, oh, this would have saved me maybe 2 days at the end of every quarter just for a performance report.
Right.
Or like an ad hoc review. If somebody's coming in, boom, click. Here are your underperformers. Here are your outperformers. Here's what the market did the last quarter. Here's, you know, the expected volatility. You know, here's what the Fed did. Blah, blah, blah. It's been so much fun. I love it.
It sounds like, so for the listeners out there, because Brian, we had a conversation offline about this, but it sounds like the Rafa AI is specifically geared towards folks in the financial sector. Is that
it's
accurate?
It's geared to, if you want to do it yourself, you can do it yourself. They give you all the tools, all the, everything, everything you can think of, really. They can do, I mean, the other day I played around with it. I tried to ask you some really difficult financial planning questions.
Okay.
Regarding like backdoor Roth optimization strategies, mega backdoor. And it gives me goosebumps probably about once a week. I'm like, no way.
Yeah.
But also, I see a big part in the financial advisory space. I mean, when I was an advisor, I just imagine having, okay, you know, remember at TIA, maybe you have 800 clients. Every client may have something different, but being able to say, oh, okay, I'm going to talk, you know, I'm going to send 50 clients an email, personalized for their portfolio, ad hoc, just middle of the week, because maybe the market's down, maybe it's up, Fed rate cuts, what have you. They're worried. Boom, sent, and it's personalized.
Game changer. That's a game changer.
Yeah, I mean, I'm worried about a recession. What should I do? Boom, done. This is how you position your portfolio. Call your advisor. That these are the things you should consider.
Yeah, and that's why I feel talking to other financial advisors about AI, and the ones that are concerned about it, it's interesting to me. It's like what is their value proposition here, right? Because at the end of the day, the way I look at it is like we're still dealing with people, we're still dealing with humans and decision making, and the AI doesn't know the client, has never had a conversation with a client and understood deeply what they're concerned about or what they're trying to accomplish. So for me, it's like the AI tool is almost just there to curate information for me. Otherwise I'd go to Google and I'd search that question, what's a mega backdoor Roth 401k contribution? And it could, I could go to article by article and curate that information myself. What AI is doing, it's going to the information that's already on the internet, on Google, on Yahoo, whatever the search engine is. It's curating all that information, I think, and then it's just organizing it and actually explaining it to you. And I think pretty well written, like plain English, not super sophisticated and complicated. And so for me, that's helpful because then I can curate that information and then provide how that's present how that's relevant to my client situation. Like, okay, how is this relevant? How is this information relevant to you? You know what I mean? Like, here's the information, but if the client's not a financial advisor, they're not going to know how that's relevant to them. That's what we're here for. You know what I mean? And so it's interesting to hear some advisors get concerned about that. And I'm like, you need to really think about what your value proposition actually is. It's not curating information for people because we're in the information age. They can YouTube University, they can find that information out there, but they want to know, how does this apply to my goals, my situation, right?
Exactly. And I think you nailed it. It's the information is curated, right? You're not going in, you're not doing the research on your own. You get it in, 5 seconds. And then you read it, you have to read it through, right? Because you may want to tweak a few things.
Yeah.
Maybe I don't want to say this. Maybe I want to phrase this a little bit differently to match my message. Still though, you've got it in 10 minutes versus a 3-hour research session.
Yeah. And I think, where I think the potential gap though, for me, the potential concern I'd have, like if I was a new financial advisor coming in, obviously I have 16 years of experience. It's like different, because I've done the research, I've actually worked with clients one-on-one. And I understand how things apply to certain situations. Like a new advisor coming in today could theoretically, if a client emailed them a question, they could theoretically like put that question into OpenAI or Rafa AI, whatever it might be, and get some answers and provide that to the client. And like without really doing a lot of research and heavy lifting. And then sort of like my concern is does that advisor really know why that information should be applied or how that should be applied to that client situation? And I think sometimes doing the research and sort of, having your teeth kicked in a little bit and going through the bear markets, going through a recession is actually a good thing, from a growth perspective. And my concern sometimes is like, AI is just creating such an ease of access to information. Like it's already easy to get. Now it's even easier. But now instead of like, hey, go and research the information yourself, it's doing it for us and providing a summary and organized format for us, for the individual that may not have a full grasp on how that Roth conversion might fit into their plan or how that, life insurance, policy might fit into an estate planning issue. I think there could be some gaps there. I think there could be a risk there, but who am I to say? I mean, I think, I think there's still, it is what it is. The genie's out of the bottle, right? I mean, AI is not going backwards at this point in time. We got to live with it. We got to embrace it. And I think we need to sort of also understand where it fits and where it doesn't fit, in any industry.
And you're spot on. That was one of the things I worked on early on was, okay, so I've got this, right? What does this mean? I took it from let's say I'm my mother and what's a good investment? It comes up Apple. Why?
Yeah.
Because it has a PE ratio, blah, 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 and growth. Well, what's a PE ratio, right? And you can go down this kind of rabbit hole.
Totally.
And it's interactive for her because she can do speak to text. And like, okay, you're kind of getting it, you know, buy, sell, you know, a rebalancing strategy, just, you know, allocation, diversification, that kind of thing. But you're right. It's up to the advisor to make sure that they know that the information that they are providing to their clients is accurate, because if the client calls, AI is not going to talk for you.
Right. That's totally true. And that's that's a good point too. It's just about the information being accurate. I mean, at the end of the day, like information on the internet, if I do some Google searches, right, there's some articles that are in that top, you know, let's say that first page in Google that are maybe from 2020 or 2019. It's still in there. So AI is curating that information and putting that in Chat GPT or Gemini, whatever.
Yep.
So sometimes the information is actually not accurate 100%. So you got to fact check. So that causes a little bit of concern too. I mean, how do you protect against that?
I think that's why they brought me on as a consultant, because I ask questions and I go through it and I'm like, no, that's not right. That could be changed. Need a, you know, disclaimer there. That answer is unreal. I just can't believe it even recommended that. But the other important part is it should be objective. I mean, if you go to marketwatch.com, right, you see all these articles. The other one, I saw one the other day. It was, I have, I think, $1.2 million. I don't want to invest in stocks or real estate. What should I do? And the author said, well, according to this, you know, CFP, you're probably in stocks and real estate to get you the 1.2. So why change it? And I was like, what? That's not the question. The question is, she's 50 years old. She's got a nest egg. She's probably going to retire in 10 years. She's nervous.
Yeah.
How can you help her sleep better at night?
Yeah.
So I've actually just put that article in to Rafa, and I asked it that question, and it gave me, you know, different options. And I was like, okay,
nice,
objective. And, you know, using it, AI is that objective tool, a fact checker, is also nice. I mean, there's so much information out there. You look at Twitter, you look at, I mean, you can go to Wall Street Bets, you can go to MarketWatch, you can go to Morningstar, you can go to IBD. Everybody's got something different. You go to LinkedIn, Goldman's saying it's a recession, and it's saying it's not a recession. Just Jim Cramer's just screaming. There's just too much noise.
And that's so true. I mean, you know, you bring up a good point around just misinformation. I mean, that's one of the top concerns I have is, you know, the use of AI to push a narrative that may not be 100% accurate. I mean, like, call me a conspiracy theorist, but in 2016, during that election cycle, like, I feel like Russians and the Chinese had a lot of disinformation campaigns going on in the US trying to divide America. You know, I don't think we're as divided as social media says we are. You know what I mean? I feel like most people are kind of like slight left or slight right or somewhere right smack in the middle, not extreme right, not extreme left. But I think AI, I mean, that's a big concern for me is like, you know, literally a video can come out that looks like you speaking or me speaking with our voice, but saying something that they didn't even say. Like I saw this video, like some AI creator made this video of Donald Trump saying something that he didn't even say. I mean, like, how the heck do you know what you're even looking at online or on TV is actually real?
Well, they've got AI for that. But no, I think Google does. But yeah, I mean, it's tough. I mean, I fell for that, you know. I was like, oh, look at that Alaskan hotel. That looks so cool. And my buddy's like, it says .AI, you know. I'm like, oh.
Yeah, but I'm telling you, some people are not catching that. You know, they you know, whatever they say, oh, this is real, you know, and that's so. Just if you're listening out there, just be careful. I mean, you know, I think, you know, most people have been skeptical for the last, you know, 5 or 6 years in terms of what they see online. You know, you got to take it with a grain of salt. But I think even now, more so than ever, you know, just with the evolution of AI. But that's
and you got to ask the incentive too. Like, why is that article out there?
Yeah. Yep.
Why did Citi say to double down on Micron? Are they paying for the advertisement?
Yep.
You know, I'm just very cynical. I'm like, why would you say that?
Yep. Follow the money.
Yeah.
So Brian, I know you and I have talked about crypto a little bit and Bitcoin,
Yeah,
and
let's do this. Yeah.
It sort of dovetails in nicely with the AI conversation, but just would love to hear, maybe kind of from the start, like how did you get into cryptocurrency and investing in Bitcoin and just overall your interest in blockchain technology?
Yeah. So some of the best investment ideas I've ever received have come from my clients. True story. It was maybe summer 2017, and I was down in Spartanburg, South Carolina, I believe.
Yep.
And it was one of my favorite clients. I mean, I would go down there and I loved them, speak with them. And they had their daughter with them, and she was talking about her friend who was in Bitcoin, and he was, making money. And I was like, I just gotta look into this, because it's always that what if. I'm never upset about the losses. I'm upset about the risks I didn't take. Like, why didn't I put a few $100 in Amazon, or why didn't I buy 5,000 of Netflix when I was sitting on my couch in 2013 watching House of Cards? So I said, all right, I'm going to look at this. And I was like, well, I can't really understand it. They're talking about these things, but why not? Let's just put some money in and see what happens. And then I started learning more and more about the blockchain and distributed ledgers. And, I know that the banks use this company called Ripple, RippleNet, Ripple Pay. So when payments are going back and forth instantaneously, that's what they're using.
Yeah.
And Ripple has a cryptocurrency called XRP, but Bitcoin is the main one, right? And in 2016, Jamie Dimon, they were all like, nah, you know?
Yep.
Not Michael Saylor. But right now with the Bitcoin ETFs, I mean, now advisors can say, hey, you can have, right, some exposure to it. And my personal opinion is, why not? Why not have 1%, 2%? Because if you have a client who's comfortable with the swings in Bitcoin, and I sent you that document with the peak to troughs. I mean, what was I think was minus 87% was the lowest, one was like minus 94. I mean, if you have a client that's comfortable with that, I mean, imagine a 25% drop in the S&P.
Right.
They're probably not going to call. They might call and say, I want to contribute.
Exactly. Hopefully they've been trained properly, where it's like, when things are on sale, you don't sell, you buy, you add more, right? But easier said than done. But I think, that's a great point in terms of what's happened this year. It's a big deal. So if you're not following what's going on with Bitcoin and investing, if I'm not mistaken, was that March of this year, Brian, where some of the big players introduced that's the spot ETF for Bitcoin? Instead of looking into the futures prices of Bitcoin, now there's spot ETFs. Like, for example, BlackRock has one, Fidelity has one. I mean, I think those are probably the two main players. So how does that work? And, should that be a consideration in an overall investment portfolio? I already know your answer, but.
So the way it works is, first, Grayscale and other companies tried to get the ETF. That didn't really go through. And then BlackRock just submits it, and it happens.
Yep.
I think they happen to be the third largest holder of Bitcoin in the world now. So it just happens. But that's important.
So that's important to note, is that these ETF fund managers, they are actually physically buying the coin themselves. Like they're not just saying, hey, this is backed by Bitcoin. They're actually it is backed by Bitcoin. They're purchasing Bitcoin to back the valuation of those shares.
Yeah, Coinbase is the custodian.
Okay. That's an important point, because in the past, those future Bitcoin ETFs, none of those, Grayscale, they weren't holding Bitcoin. I mean, they probably were and are, but the Bitcoin wasn't backing the valuation of that futures ETF, right?
Grayscale was, but they weren't set up as an ETF. They were a trust, so they always traded at a discount to what the actual price of Bitcoin was, whereas the spot Bitcoin ETFs, they have a lower expense ratio, and they move in tandem.
Got it. Okay.
So
and so you're seeing that has been working well. So obviously that was March, and now it's mainstream. Now these big custodians are offering you to purchase on their platform. You can buy the BlackRock, IBIT directly on their custodian's platform. So now it's a little bit more mainstream. Do you kind of feel like advisors are now getting a little bit more comfortable with actually incorporating that as part of an investment portfolio, or is it still an uphill battle?
I've asked quite a few. And you're the only one that I've known that has talked to a client, and done that. The other advisors that I've talked to believe it's still too volatile.
Yeah.
But my argument to that is, okay, well, let's say you have $10,000, you have $1 million, you have 1%, right? You can allocate it.
Mm-hmm.
And I ask the advisor, well, let's do this. If I ask the advisor, hey, should I buy Bitcoin? The advisor might say, no, we believe it's too volatile. We think you should stay in bonds and stocks. It's more, steady over the long term. Even the 10,000, we think you should stay there. Okay. The problem is if Bitcoin goes up, that client is going to feel like, I knew it.
Yeah.
I missed out. Right. Yeah. And what you don't want is that client then to go start chasing on their own without telling you, because that's where you can get into trouble. So if you have a conversation up front, and the conversation is, the client says, hey, are you currently, or do you ever plan on buying Bitcoin, a Bitcoin ETF, or any company that, indirectly deals with Bitcoin? Now the advisor might say, if he says, or she says no, why?
Mm-hmm.
If it's yes, okay, well, what's your thesis, and how much do you allocate?
Right.
And then from there, I just feel like if you had bought Intel, if I said, hey, 2019, you can put 10,000 in Intel or 10,000 in Bitcoin, which one do you think is going to be, worth more by 2029?
Mm-hmm.
And if the advisor says Intel 100%, they're kind of locking themselves into a potential issue. But if they say 50-50, it's like, all right, well, why don't I just put 10,000 in Bitcoin and, we'll just let it go.
Yeah. And I think that's the risk tolerance. It's a risk tolerance question, right? I mean, it's truly what it comes down to. And, for a lot of our clients that are already retired, they've brought it up to me. I've been having conversations about Bitcoin for like 12 years, and to your point, your clients give you the best investment advice. Well, in 2012, I had a client say, hey, Kevin, just put like $100 and buy some Bitcoin. And I didn't do it. And now I'm like, oh man, I should have done that. Right. But really in 2017, that's when I feel like things started to really happen, where the price went up to, I think it was about 18,000, and people were like, this is crazy. Look at this bubble. And, talking about the tulip bubble. It's just, at that point I was like, this is not going anywhere. I really need to dive in and start to research this and be prepared for these questions, because I was getting those, questions from clients in 2017, 18, 19. And my takeaway was like, I don't have a crystal ball. I don't know what the value of Bitcoin is, but I see the value in the blockchain technology that it created. You know what I mean? Like what Bitcoin did with creating the blockchain technology and open the doors for these other altcoins to create blockchain, which is essentially just, the communication mechanism from one party to another that is secure, hopefully, as secure as possible and private, and unique to that specific transaction. And I was like, this makes a lot of sense. I don't know how much Bitcoin is, what the value is. Who knows? I mean, it could be $1 million a coin. It could be zero. I have no clue. But what I always told my clients was, even then was like, go research it yourself. Okay. I think it's very interesting to understand, what Bitcoin did with the blockchain itself. Like go research it, do some due diligence. And if you really want to invest in Bitcoin, just be comfortable with the fact that that investment could go to zero. And so you just have to be comfortable with the amount you put in. It is a gamble. Okay. It is a substantial risk. It's not like investing in the S&P 500. Like you said, if you just believe in capitalism, put it all in the S&P 500. Capitalism is going to work its way into a 10% annual rate of return, at least historically speaking. But Bitcoin, it's just like investing in an individual stock. There's always uncertainty that specific company, experiences headwinds that they didn't anticipate and it goes to zero. Bitcoin too. I think with the introduction with the ETFs, and sort of the thinking there of like, okay, well, these big firms, these big asset managers are now forced to buy Bitcoin themselves in order to back their ETFs. I'm like, it's mainstream enough now. It's one of those things now where clients talk to me about it, to your point of like, hey, Kevin, I'm interested in investing in Bitcoin. I'd much rather be like, if you're going to do that, let's do it here. So we can kind of track it. We can make it as part of the overall investment portfolio. And, now directly into Schwab, which is our custodian, we can purchase IBIT or the Fidelity Fund. I don't remember the ticker symbol. So I feel like it's kind of made things a little more mainstream. And, for our process now, like I certainly don't put it in all of our clients' portfolios. Like that's definitely not what I do.
Yeah.
But for the right client, I have this client that works for Google, and obviously he's deeply involved in AI and technology and crypto and the blockchain. And he was like, I want to invest in some coins. I'm thinking about doing this and doing that. And I just brought it up to him. I was like, hey, Aaron, if you're comfortable with this, if you've done some research on this and you have the capacity to take that risk on and the tolerance for it, why don't we just invest it in the portfolio, invest it in the spot ETF? And so, it's more of a case by case, but I think more and more clients that are in their, let's say 40s or 50s, and maybe they work at big tech and they're comfortable with investing in crypto. I think the spot ETFs have really been a game changer. And so this isn't a recommendation to buy Bitcoin. It's not a recommendation to buy IBIT. You've got to consider it as the overall context of your portfolio. But if you truly understand generally how blockchain works and how Bitcoin works, have the conversation with your advisor and just see what they say. I think I would just be more so just curious to like hear your advisor's perspective on it and why they'd recommend it or not, as it relates to your unique situation, your unique circumstances. And so that's really my plea there. But
and I'll add to that. I think it's so important too that the way you handle that with your client, right? So you probably decided on allocation, and then Bitcoin's volatile, right? So when I sent you the figures from trough to peak, I mean, it was about 1,800% gain, right? So if 1% becomes 2%, do you trim back down to 1? You get in front of that before the euphoria sets in. Yeah. Before that, all the memes start hitting and the FOMO, we're going to 10 million, right? Yep. It's a disciplined process. Hey, we're taking gains, right? And then if it drops 90%, 70%, you're like, okay, maybe we can buy more at this time.
Yeah. What's the process? Yep.
So you have that in place with them. And I think that builds trust, and that's super important because if you're doing it on your own, you may not be monitoring the account. I mean, Bitcoin can drop 20% between 4 a.m. to 7:30 a.m. when you wake up. And I also think it's an asset that you don't sell. It's like a 15, 20 year hold.
Yeah, I agree. No, I'm with you there. And, I think it's for the right client. It could be a fit for a small subset of the portfolio, and, I think that's really, you've got to really be careful with that. I mean, if I were to, let's say, put a gun to your head, Brian, and say, what percentage of the portfolio would you suggest going into alt coins or crypto? What would you say? Or maybe it's a range. 1%.
I keep between 1 to 2.
So if you have $1 million portfolio and you're following Brian's guidance, if that's $10,000 to $20,000, if you lost it all, is that going to result in an unsuccessful retirement? Hopefully not. Hopefully you have a nicely well-diversified portfolio that's complementing that particular allocation. But if you've got, let's say, $1 million portfolio and you put in $100,000 and that $100,000 went to zero, that's 10% of your holdings went to zero. That's a problem. And so I think that's really where, if you're really interested and you understand the way it works and you want to incorporate it as part of an investment strategy, just having those conversations up front is in terms of what is the target percentage? If it goes down to zero, what's the impact? And what is the process going to be as this thing continues to have volatility? Because I don't see the volatility going anywhere. And I see it continuing, but maybe not as volatile as it's been over, let's say, over the last 10 years, but still with some volatility. But what's interesting though, Brian, for me, like I've been tracking Bitcoin more heavily really for the last 6 to 7 years, just in terms of like price, just how it reacts. And it seems like it's directly correlated to the stock market, like let's maybe even say the NASDAQ. I mean, so it almost kind of feels like a position that would replace some of your growthier stocks in the portfolio potentially, or where would it fit from a portfolio construction standpoint?
I've looked into this, and I have never seen a pattern repeat itself as often and as predictably as Bitcoin has.
Okay.
So if you look at 2012, 2016, 2020, each of those years, Bitcoin halved. Mm-hmm. And then roughly about, 500 days later, it peaked, and then it dropped, right? And then up to the next, and then same thing, peaks, drops. So we just halved in April of 2024. And, I've got my stop limits already put in place because I know it's going to drop at some point. Mm-hmm. If that pattern holds, which I don't know of any other pattern in the market that has ever consistently done that on an every 4-year basis, it should work out, I guess, I hope. And, Michael Saylor's a smart guy. People give him a lot of gruff because he buys Bitcoin, right? It's like, oh, he bought it up, it's down 50%.
Right.
He's so stupid. There was a 2012 article where he predicted Apple would be $1 trillion company. Wow. And, he was very adamant about it, and he laid it out, and I watched it, and I'm like, yeah, that made a lot of sense. Mm-hmm. Everybody's going to have an iPhone.
Yep.
Yeah. It's simple math. Okay. But once again, it's just something you've got to keep an eye on, talk to your advisor about. The other thing I wanted to talk about is if they don't have it with their advisor, let's say it's at Coinbase, they own the actual Bitcoin. Maybe they own 50,000, right? Mm-hmm. Maybe it's 5% of their portfolio, and that thing drops to 15,000.
Yeah.
They should definitely have a conversation with their advisor because that is a huge tax loss harvest opportunity.
Yeah.
Crypto is treated as a taxation point, property. Mm-hmm. So you can sell it and buy it back. There's no 30-day wash sale.
Is that still legit? I thought there was some changes there with the ETFs where it's like now they're looking at the crypto as a security and it follows those same wash sale rules. So if you sold, like back in the day, you could, like to what you're saying, like you could sell your Bitcoin, take the loss, and literally the next second buy the Bitcoin at the same price, and you still have that position, but now you have the tax loss. But I thought they did away with that at some point over the last 12 months.
Well, I wouldn't necessarily sell the ETF and buy Bitcoin on Coinbase, but let's say you have a client that says, "Hey, Kevin, I heard the podcast. I don't have a Bitcoin ETF, but I do have. I didn't tell you this. I have 50,000 in Bitcoin at Coinbase. That's something you probably want to keep track of.
Absolutely, yeah.
So if it does go down, like, all right, here's a plan. We're going to sell it. We can buy it back. Mm-hmm. And then in your other brokerage account, we could, harvest some gains and some overweight positions.
Yeah, absolutely. No, I think that the tax loss harvesting opportunities are big just because of that volatility. And there's no other asset class, at least in the assets that we use for clients' portfolios that have the volatility that it has. And that's why for 99% of our clients, we're not using it, but for the right client that reaches out and proactively wants to have the conversation, we're prepared to have the conversation. And, I'd rather we do it responsibly with us versus, like you said, the client kind of going in the wild, wild west and just picking some random dollar amount to invest in some random coin like Dogecoin because Elon Musk tweeted about it or something,
Yeah, I'm guilty of that. You get caught. I mean, it's fun. You get caught up in the euphoria, and you learn every time. You learn a lesson.
Yeah. And I try to avoid, like, I had so many family members and friends like texting me during that craze, like around 2020, like all the meme stocks. And that included a lot of these altcoins. And they were like, should I buy Dogecoin? Should I buy? I was like, gosh, I'm going to just refrain from no recommendations, any family or friends listening. I'm not going to give you any recommendations specifically on crypto. So that's not what I'm going to do for you. But this is great, Brian. For the listener out there that's like, okay, I'm feeling like I need to educate myself on this one. Do you have any suggestions on like podcasts to listen to or books to read or people to follow on social media that talk about crypto and AI? Like any suggestions there? And if so, we can plug those in the show notes as well.
Yeah, I would definitely Google some Michael Saylor videos. He does a fantastic job in explaining it. I'll send you a few other links as well. And who else? I think Coinbase does have some great educational pieces on it. I'm sure BlackRock has a wonderful fact sheet about it. But yeah, Michael Saylor, he does a very good job of explaining it, the volatility, especially when he's on the defense, right? When it's down, he sticks to his guns and says, listen, we've got 94% of the Bitcoin supply already bought, 6% left. Institutions are buying. I'm not worried about it going down. I'm worried about not being able to buy more.
There you go.
And
right. There's a finite supply.
Yeah, he gives a different perspective, right?
Yeah.
And then you could also look at Warren Buffett because you want both opinions.
Yep.
Right. You want an advocate, and then you want someone to argue against it. And Warren's going to argue against it, just like he's going to argue against gold. It's not an income producing asset. It's a speculative bet. You are essentially buying something in the hope that you're going to sell it for a higher price down the road.
Right.
Like a Pokemon card. But with BlackRock and Larry Fink behind it, say what you want about Larry Fink. He's a smart man and he knows how to make money.
Yeah.
I don't think he's going to let Bitcoin fail.
Yeah.
It's a cash cow for him.
Yeah. I think there's, it just feels like it's more mainstream now. So I think that does put a cap on the upside, obviously. But, I think there's still an argument to, like you said, maybe it's a small percentage or a small subset of your portfolio if you have the risk tolerance, if you have the risk capacity to do so, and just making sure you have it in the context of your overall financial plan, your overall objective. So this is great stuff, Brian. I appreciate you coming on. Where can people connect with you specifically, and also Rafa AI?
You can connect with me, LinkedIn, if you want to send that out.
Yep.
And then Rafa AI, just rafa.ai.
Okay.
I'd be happy to kind of walk you through a demo,
Nice.
Just kind of show you about it.
Yeah, that's great. Yes. So that's a good point. If you're a financial advisor listening out there, I know we have some advisors listening to the podcast, and you're interested in, how to leverage AI to make your business more efficient and make you more productive so you can spend more time on the things that are going to provide more value to your clients. Definitely check that out. Check out Rafa AI and connect with Brian as well. So, awesome, Brian. Well, listen, appreciate the time as always. Enjoy the rest of your day. And we'll look forward to continuing this dialogue. I don't think this is the last time we're going to talk about this particular topic. So, we'll keep you in the loop then, and we'll definitely want to have you on again. All
right, man. Looking forward to coming back. Great to be on the show. Congrats on the 50th podcast.
Oh, I appreciate that. Yeah, I appreciate it. And we're looking forward to the next 50 here.
All right, let's do it.
Well, that's it, everybody. I hope you enjoyed that conversation. I hope you enjoyed that interview with Brian. If you want to connect with Brian or learn more about Rafa AI, the company he's consulting for, I'm going to provide a couple of links in the show notes. So go ahead and check those out and give him a follow. And if you're finding value in our content, that's great. I appreciate that. We appreciate that support. All you have to do, or the only thing we ask you to do, is just like or follow the show wherever you are consuming podcasts, and make sure to check out our YouTube channel. Make sure to follow our YouTube channel. Okay, we're going to be doing some unique things on the YouTube channel that I'm super excited about. It's going to be sort of like a little bit of a spin-off on the whiteboard retirement plan case studies that we're going to be doing on this podcast. which we do have the next one locked and loaded. But if you're interested in being featured, go ahead and fill out that retirement readiness review survey in the show notes. And just make sure to indicate somewhere that it is for the whiteboard retirement breakdown. Okay, because that's the same link I ask people to fill out. If you're interested in working with me one-on-one, also go to that link, fill it out, and we'll give you personalized feedback directly to you with some opportunities that we see if we were to work together. So if you are interested, just go check out that retirement readiness survey, or just go to my website directly at imaginefinancialsecurity.com, and you can just book a meeting with me one-on-one. But we've got the next whiteboard retirement case study locked in. And on the YouTube channel, I'm going to be doing what's called the whiteboard fireside chat. So it's essentially going to be more of an in-depth breakdown on one specific thing that we may talk about in a podcast episode, or just in general. If it's something that comes to mind, I'm like, hey, I want to do a little bit of a deep dive on this. I'm going to break it down on the whiteboard, and hopefully that's an educational way for you to learn more about a topic that you might be interested in. So again, go check out the YouTube channel. It's on the Planning for Retirement podcast YouTube, which is going to be linked in the show notes as well. So that's it, everybody. I'm super excited about some of the content that we're coming out on the podcast upcoming. One of which is going to be the next episode. It's going to be about the A word, or annuities. Okay. And I'm going to be having 2 guests on that show, 2 interviews. All right. And partially because I asked both of those are the top 2 that I wanted to ask to come on the show to talk about these topics, because they are industry experts, Cheryl Moore and Tracy Lonesbury. And I just assumed neither of them would say yes, but it turns out they both said yes. So I just thought, hey, maybe that makes sense to have a trio, a 3-way conversation. So I'm super excited about that one. We're going to be recording that upcoming. So just make sure to follow the show so you don't miss out on that one. And of course, the whiteboard retirement breakdown will come shortly thereafter. And then we've got several other topics that I'm super excited about. I just don't know what the order is going to be just yet. But a lot of exciting things on the show. Again, I appreciate all of your support. And until next time, this is Kevin Lau signing off.